When I started investing in the stock market, I didn't know anything. I mean, I knew the concepts of stock. I knew the concepts of a stock market. But had you asked me to define a stock or the stock market, I wouldn't have been able to do it. I thought the stock market was, I thought it was prohibitive. I thought you couldn't get into it unless you had somebody else do the work for you. Prohibitive in the sense of knowledge, that it was so complicated that I just couldn't figure out what company to buy and why I'm even buying it. I just didn't think that I could do that. I also thought it was just for rich people. Now, I was in the stock market because I'm thinking, well, if it's for rich people, if rich people are in the market, then maybe I need to be in the market too. So I was literally, I'm picking up the breadcrumbs. I'm just trying to follow along with no guidance, no one taking me by the hand saying, hey, come on, this is what you need to do and why. And so that is really how I just got started. But I wasn't doing it myself. I had a financial advisor. And then when I learned that everyday people with everyday 9-to-5 jobs invest in the stock market to build wealth, and that you can use a fraction of your income invested for long-term wealth. And so now I manage my own portfolio. So I'm going to share with you what the stock market is. And I'm just going to give some basics about the stock market. I want to give you enough information so that you know what the stock market is and where you're going to be putting your money. I am not a financial advisor. I'm a teacher. But I can tell you what I know and what I'm doing with my side hustle money. So a stock is ownership in a company. You can buy one stock, you can buy 100 of that particular stock, or more. Stocks cost different prices for different companies. When you buy a stock or share, you become a shareholder. Many stocks are publicly held stocks. So there are publicly held stocks and there are privately held stocks. Publicly held stocks are companies that allow you and me to buy into those companies, to buy into the ownership of those companies. Some of those companies are Apple. I'm filming this video on my iPhone. Apple is a publicly held company. I use Microsoft at work. Microsoft is publicly held. Target, Macy's, Starbucks, CVS, publicly held companies that you can buy into. Then there are companies that are privately held. Privately held companies are owned by a select group of investors. We do not have access to the ownership of those companies. That is basically what a stock is. Now, what I want you all to do is also listen for homework, because I am going to give you something to do. When I got started, I jumped in, I started learning things, and I have homework for you all. So listen in for that. Now, a stock, you can buy just one. There is also a security called an ETF, an exchange traded fund. An exchange traded fund is like a basket of stocks. It can have hundreds of stocks in it of the same category. So it could be a basket of technology stocks. It could be a basket of healthcare stocks. It could be a basket of growth stocks. So the beauty of an ETF is that you purchase that ETF with those hundreds and hundreds of stocks in it for one price. When you purchase an ETF, you are automatically diversified in your portfolio. And the other beauty on top of that is that the risk is spread out among all the stocks that are in that portfolio. So that is a good idea of what you're going to be getting into. You're going to be buying stocks and you're going to buy ETFs. Now, let's talk about the stock market. The stock market is a collection of exchanges and markets around the world. So the stock market is not just in one location. The stock market is around the world, right? So here in the United States, we have two of the largest exchanges or markets. One is the New York Stock Exchange, and the other is the NASDAQ. The New York Stock Exchange is the NYSE, and the NASDAQ's, the letters for that are NASDAQ. So now let me give you the homework. What I want you to do right now is put in the comments 2 companies that you're interested in investing. 2 companies, put them down in the comments. Number 2 on that homework is I want you to Google 3 ETFs. The first ETF is going to be an ETF that tracks the stock market, the S&P. The second one will track growth stocks, and the third one will track dividend stocks. There are several strategies to invest in the stock market. There's a long-term investor, a short-term investor, and a dividend investor. Yes, you can be all 3 of them because they have different objectives. But generally, at this point, we're probably going to be doing, well, you do whatever you want to do. A long-term investor. A long-term investor is when you invest for decades. So that's 10, 20, 30, 40 years. The benefit of long-term investing is that you get the greater benefit of compound interest. You also can invest smaller amounts of money and still have a tremendous reward. Now, short-term investing is when you invest for 5 years or less. Those objectives, now let me rewind for a moment. So long-term investing, the objective of long-term investing for people is usually retirement income or generational wealth. For short-term investing, which is for a period of about 5 years or less, that objective is a little different. That's when people sometimes are saving for a down payment on a house. They may be saving to go on a vacation or saving to buy a car. That's a short-term investment, right? And then there are dividend investors. Dividend investing is unique in that you don't have to sell your shares. These are companies that pay dividends, which are a portion of the profit of that company. They pay it to their shareholders on a regular basis. So they're literally paying you to hold on to their stock. They're paying you to hold on to their stock. Now, granted, you have to have a lot of stock in order to get $500 a month or $1,000 a month. But here's the nugget here. You don't have to sell the stock. And the stock will continue to go up in value, to increase in value. They're still going to be paying you that dividend. So all of those are 3 terms that you all need to look into: long-term investing, short-term investing, and dividend investing. Now, let's get into best practices. So the best practices when you begin to invest is called dollar cost averaging. It's called DCA. When you DCA, all it means is that you're going to decide how much you're going to invest in your stock, and you're going to decide on what days you're going to do it, and you're going to do it consistently, day in or week in, week out, however you decide to do it, whether the market is high or whether the market is low. When you do that, you get the overall best price for that stock. So DCAing, or dollar cost averaging, is a way to get into the market and be comfortable. You've already done your research on why you even have chosen these stocks. You're comfortable with your decisions. Now you're going to put it on automatic. You are on your way. The next video, I am going to go over what I am doing with my side hustle money. And this may be 2 videos, what I'm doing with my side hustle money and also going into brokerage firms that you can use to start investing. Come back here and tell me what you've learned.